Hey everyone, welcome back to this YouTube channel. If you already haven't subscribed, definitely do. Today we're going to cover the big news that we received this week. So CPI, PPI, and the retail sales. And then we're going to go a little bit into the technical analysis side of things too, and just talk about where EURUSD could head based on all the data we have. So we'll go through the data that was released, we'll talk about the institutional position sizing, and then we'll go into the technical analysis. So make sure you stay to the end. Right off the bat, just before we get going, just to show you guys the main news we're looking at here. So CPI came out higher than expected. So this is a positive for the currency, but it's bad for the country as a whole. It's kind of a weird one, but if inflation's higher, it's devaluating US's debt, basically. So high inflation is essentially good for the currency, horrible for the country. It's a bit of a weird concept. Next, we had the core retail sales. This came out quite a bit worse than expected. I wouldn't really focus too much on that. The unemployment claims, this one's a little bit interesting. So less people are unemployed than projected. Now, this isn't necessarily a good thing. If you guys tuned in to one of the last sessions, we talked about how 30% of Americans are currently holding two jobs. So you pair that with the actual jobs available and the unemployment claims, it's not necessarily a good sign either. Unemployment going down is good, yes, but when it comes to like open job reports and stuff, the fact that so many Americans are holding two jobs, 30% a high number, that's essentially bringing some of the numbers down, and that's not necessarily a good thing. Core PPI, again, came out better than expected for the States. So let's just actually look at the data that we got on our weekly recap. So the week before that, we had NFP. NFP came out twice as good as projected, basically. To make a long story short, that gives us a very bullish dollar argument, the US dollar we're talking about. Everything we got this week supports further bullishness on the US dollar. It doesn't look like the dollar strength is ready to quite subside yet. So if we're just looking at the overview of everything that happened, the FOMC members are basically saying there's still inflationary pressures. We're not looking at cutting anytime soon. The chances of a rate cut in March or May went down drastically. So if you remember at the beginning of the year, analysts were saying there's going to be 6 rate cuts. From the numbers we're getting, that's highly unlikely, especially considering inflation came in higher again. So this is a big one. Inflation came in 3.1 instead of 2.9. Obviously, this is the number the Fed's trying to get to 2%. If the Fed is doing their jobs correctly, essentially, this is not going to sound good, but essentially there should be more jobless people. Basically, companies are spending less money, companies are expanding less, companies are hiring less. The amount of jobless people goes up. So this is, again, not supporting rate cuts. This is, again, an argument for a bullish dollar. This one I wouldn't worry too much about. The producer price index for January, again, higher than expected. Again, this is all bullish dollar argument. The only bearish dollar argument we had was the retail sales. With the weight of CPI, NFP, and the job market in the US, I feel like that completely crushes retail sales. And it's just a bullish dollar for longer. That's the short version. If we look at the ECB side of things, they pretty much have the exact same sentiment. The next move is to cut interest rates, but the exact timing depends on the table. The last thing the ECB told us is we're looking at summer or end of summer. Keep in mind, Euros inflation's higher than the US, so there's, again, not an interest rate cut anytime soon. That's about it that I really want to go over. There's a lot of minor news that happened. I don't think we need to get too concerned about. Nothing in here. I do want to talk about the institutional position sizing. So we'll look at the leverage funds and we'll look at the asset managers. So the leverage funds, which is kind of your 3-month projections, 6-month projections, kind of your more smaller hedge funds, the more immediate funds, they're actually adding to the short positions of both the euro futures and the dollar futures. The way you would look at these is essentially you would add the 11K to the 94K and the 19K to the 88K. This is basically saying in the near term there's a higher probability of Euro USD going down. So these are the kind of the smaller funds. As far as our bigger funds, if we go look at the actual asset managers, they're still long-term bullish, but these guys, we're talking like 1, 2, 3-year projections. So consider this like your weekly, monthly time frame guys. And the leverage funds would be like our daily guys, kinda, weekly even. So the leverage funds are more on the short side of things for Euro USD, and the asset managers, which is your big funds, your big pension funds, stuff like that. So these are the guys that really, really move the markets. They're long. Until these longs realign though, everything that's showing us, the current data is basically saying that there's nothing telling us right now that price is going to do anything different but continue down based on how strong the dollar is, sorry. So right from the top down, this range never balanced. So that's kind of my higher time frame balance that could happen. This is kind of my more intermediate range. If I pull it here to here, you can see this range never balanced either. So the most probable thing for me and the path of least resistance would probably seem something along the lines of price showing us this level wants to hold and continue down. This is the path of least resistance. This would make the most sense with the data we have. So if the technicals align, this would kind of be my expectation. Obviously, price doesn't have to rebalance. It can just continue down. In the extreme case, price wants to come and rebalance this whole range. It could happen. Again, we'll just see what this week brings. But as of right now, there is nothing currently bullish about Euro USD. So for myself, I like to see either a couple breaks structure that are holding and couple respects of daily liquidities that are holding. And that to me is a daily trend change. Until that happens, it's just bearish. If the trend does change here, it doesn't necessarily mean we're taking this high out. It could just be rebalancing the weekly and continuing. At some point, the trend will take over and the asset managers will push this up. When that's going to happen, I don't know. I imagine it's going to more be looking at CPI data, jobs, and somebody to start cutting rates. And I think that could be a huge catalyst for changing price direction. But for the intermediary and everything we've gotten released to us in the last couple weeks, I would say you're just bearish. It's going to be, more pips caught to the downside than the upside. Any upside moves will likely be retracements, rebalances for a continuation down. So that's kind of how I'm viewing this market. In terms of news coming up this week, so there's some Euro news. There's really, none of these news are really huge. This FOMC meeting minutes is going to be a bunch of members talking. This could do something. My expectation is them basically saying due to the current data, the interest rate cuts are unlikely, and they're probably just going to repeat what they've been repeating for 2 months. But that's kind of hearsay, but that would be the expectation. Euro PMI might get like a daily burst. I wouldn't really look at this data as too significant. So again, interest rates, jobs, inflation from the US dollar is kind of the big ones we're looking at. This is all kind of more minor stuff and not really long-term direction. So nothing huge this week, but we'll do a recap on it anyway based on the data, based on everything that comes out. But yeah, from everything I can see so far with the data we have today, this is showing a stronger dollar for longer. And like I said, the only chances that we do see any bearishness as of right now would likely be rebalances just to continue up. Ultimately, to change this trend direction, I'm going to say we'll need some fundamentals saying, something about inflation, something about interest rates. Until that happens, I would just not reverse the trend. I hope you guys enjoyed this. We'll do another recap next Sunday. Make sure you tune in. And I'll see you guys next week.